So let me show you how we can open a short put on gold, which will have probably a 97.5% win rate in this specific situation, and why this is a pretty good idea. Now, why would we open a short put on gold? Well, there are a bunch of tariff uncertainty, and it's likely to increase at least up until August 1st. As we know, Trump is pretty crazy. We don't know what's going to happen, but it's likely going to be more volatility, which means that the SPY is likely to go down and gold is likely to go up. Now, at the very, very worst, if suddenly all tariffs are just completely gone and we have a bunch of trade deals with everyone, which is really unlikely, gold might go down, might stay the same. Even if it goes down, it's not going to go down super quickly, and it all depends on how we structure the position. So I'm going to show you everything. So for the position management, which is really important, we want to take profits at 50% of credit. We don't want to stay until the expiration. It's way too much risk to be in the market. And the risk management, for the risk management, we want to sell the futures contract if the price reaches the short put strikes, which is obviously extremely unlikely, as I'll show you in just a second. But this is a more advanced technique, I guess. Most people will probably use stop losses. I don't really use stop losses. The key to use this kind of defense technique, when you just sell the future contract, if the price gets closer to your short put strike, or you buy the future if it gets close to your short call strike, the key is to keep the position small to begin with. If you can do that, then you will have absolutely no issues doing that, and then you basically will have no risk towards one side. And obviously, you will have to manage the future contract itself, have a pretty tight stop loss, go in and out, and it is what it is if it gets to this point, but it's very, very unlikely to happen. Now, the position size should be about 2% of the total account in credit. So if the account is $100,000, we'll try to collect about $2,000 in credit, and the position must be closed before August 1st because this is effectively when all the tariffs are going to go into effect. So regardless, if the position is not in a good place until August 1st, we will need to make a call. Do we close it? Do we keep it? I'll probably tend to just close the position. Now, what strike to choose? Well, for me, a safe strike, just based on some technical analysis, which is basically we can see the price of gold has been moving sideways. For me, a safe strike will be 3,100. It's pretty far from the current price, which is 9%. So this is a pretty big drop for gold to be able to get there in just a few days, and very unlikely, obviously, given Trump and the tariffs and everything in between. So this is the strike ideally I would go for, and some people might go for a put spread, so on and so forth. For me, this is more of a quicker option to be in and out of the market because the theta is pretty large, as you will see in a second. So let me show you exactly how this trade would look like. So what I found is currently, and I'm recording this is as the market just opened. It's 6:20 right now on Sunday. So 44 days to expiration. The underlying future contract is October. So if we go to the 3,100 put strike right over here and we sell it, we can get about, or actually, let's see here, per one contract, we can get about $440, which is it's probably going to be a bit more because it shows us the credit for the bid side, so for the lowest amount of credit. So we probably can get a bit more for 60, for 70, give or take. In terms of margin requirements, mine are really different. It is different in different countries for different brokers. But if we try to collect about 4% in credit, it will be close to about 4 contracts per every $100,000, which here it shows as $1,760. It will be probably closer to $1,800, give or take, maybe even a bit more, $1,840 before fees. But I will go safe, and I will go with 4 contracts. Now, based on the theta, which is $104 per day, if we open the position, we should be out within 8.5 to 9 days, just using theta. And obviously, if price goes up, it will work in our favor. If price goes down, it will work against us. But at the same time, when price goes down, theta goes up significantly more, right? So if we look at a smaller move, see here, let's put it on a 5% move, and you'll see exactly what I mean. But basically with these puts, as they get closer to the money, theta goes up with them, which obviously is a good thing for us, but it's not a good thing that the price is moving towards us here. So here you go. If the price moves 1 or even 3% against us, yes, the position is going to be down. The price will be about 3,300, which is still very, very, very far away from our short strike, but the theta will be basically almost double. So this is a pretty safe trade in my opinion, given the situation, given that we have some more tariffs on Mexico and the European Union. That's my take on what's going on the market right now and my trade idea for this week. And you know what, let's go ahead and just kind of open it up. Now this is a demo account just to kind of show you how everything goes. I'll just send the order in. So yeah, I'll keep you posted if I have any new ideas, but this is should be a pretty good safe trade based on what's going on with a really, really high probability of 97.5%. Thanks so much for watching, and I'll catch you in the next one.